Hello, I'm Toby Cisneros, and welcome to Sector Vector, the show where we dissect the U.S. equity markets to look at how the different sectors are performing. We saw further gains for U.S. equities this week as hopes for a second stimulus package were first dashed and then swiftly revived, with President Trump proposing a revised package with targeted aid for hard-pressed sectors and industries. At an index level, the Dow finished the week up 3.3% and the S&P 500 closed 3.8% higher. The Nasdaq, which has lagged behind its peers, added 4.2% to bring its year-to-date gains to plus 34.3%. Impressive as that is, it's still 5.74% below its year-to-date and all-time high. Despite S&P gains, when we look at fund flows in and out of ETFs over the last week, over $5 billion in redemptions from the main ETF that tracks the index, the SPY. According to our proprietary search tracking software, Trackstar, SPY was the most researched ETF by institutional traders over the last month. We might be seeing a bit of rotation here. Another hotly searched ETF was IWN, an ETF that tracks small-cap Russell 2000 companies, and it saw over $1 billion of new money enter the fund last week. Now, with the drama of President Trump's hospitalization over and done with, stimulus came into investor focus. When the deal looked to be off, the market sold off, and when it returned, so did the market. In recent years, the market has been driven by large overarching themes. At first, it was risk on, risk off, and more recently, quantitative easing and tightening. This stimulus bill is just the latest theme the market looks like it has latched onto. The financial sector, and specifically regional banks, will be one of the main beneficiaries of a stimulus package, and they were the standout sectors last week, gaining 6.8%. The sector has added over 15% since the 25th of September, but it's still down over 25% year to date. Transportation is another sector that looks set to benefit from targeted stimulus. The transport sector index added 4.2%, boosted by stimulus hopes and support for the airline industry. Interestingly, Trackstar data tells us that JETS, the ETF which tracks the airline sector, has caught the attention of Wall Street investors, and it's not surprising to see stocks like JetBlue up over 8% last week. Interestingly, the S&P 500 Transportation Index is at decade highs despite the strife caused to airlines by COVID-19. Another sector closely linked to transportation is energy, which added 5% last week, helped by crude oil prices, which rose 9.5%. There were also solid gains for alternative and renewable energy stocks within the wider energy sector. Solar stocks in particular had a strong showing with an average gain of 22.54% per stock. To finish, looking at an industry level, we can see that auto manufacturing up 39.3%, solar up 172.7%, and dairy food products up 150.3% have been among the biggest gainers this year. In terms of underperforming areas, we need look no further than oil and gas drilling, down 72.8%, oil services down 70.2%, and coal, which is down 62.3% since January. That's all we have time for this week. Safe trading until next time.